welcome back everyone to another RLT Pivot podcast. I am once again joined by my amazing co-host, Mr. Dan Jansen. How are you, sir?
I am doing fantastic. Good to be back again for another episode and installation of the Real Life Trading Pivot podcast. So with how I would like to kind of direct this episode for the listeners, mainly because we cover a lot of different topics here, a lot of it geared to new or struggling traders for whether in the real life trading community or outside. There's so much wealth of knowledge within the market, so many strategies, so many details. But I think also the process of learning, maintaining, and being able to grasp a strategy that really works for you almost needs its own topic by itself. How would you, Tracy Ball, be able to cut through a lot of the noise, which some of those strategies that are floating around, they have validity to them. Some, one trade worked one time and somebody created a YouTube video, right? So it doesn't have high success rates. How do you, for you, what are some things that you would do in order to be able to really find and develop a strategy, or even take information from maybe a guest that we had on the Pivot podcast, or strategies that we might have went over on the Pivot podcast? How would you kind of narrow that down for you and say, let me focus on XYZ as opposed to something else?
So how would I figure out what strategy I should use, or how should I develop a strategy? Which question are you asking?
I would think both. I think in some realm they're both very similar. Okay. But let's focus on the developing of a strategy, because anytime you have a strategy, then you're kind of just implementing, or if you're developing your plan, gotcha, you typically have more ability at that point to push in different strategies into that plan.
Gotcha. Well, there's a couple things for me that make it important to have or to consider when I'm developing a strategy or when I'm trying to implement a strategy. And one of the factors that could make it either easier or harder for me to actually execute a strategy could be the tools that I'm using. So for example, a lot of real momentum trades require fast execution. And I don't have a broker that allows me to utilize fast execution. I've got to confirm and submit and confirm and confirm and confirm and confirm and then confirm again and then sign off my oldest child, whatever, before I hit the last final confirm. And it's time consuming. So for those styles of trades, I know that I'm going to get missed a lot. I'm not going to have the opportunity to get in. And it's just a limitation of my tool. So first of all, you have to understand the types of tools that you have available and how they operate and how they work. From there, the next component for me would really be how well do I see the setups? So if it's something that I don't see very well, then it's not going to work for me. If I can't catch the setup, if I'm not noticing the setup until after the fact, then that's not really going to be a setup that's good for me. So for an example, again, would be short trading. And I'm not saying that I don't short trade, because I do. I love short trading. But I know of a lot of individuals that really struggle with seeing that short trade and how to get it, because they're newer traders. They haven't developed that skill yet. So is that really a trade setup that you're going to catch a lot of right now? No, not until you develop that skill, not until you get better at it. So maybe it's better for you to focus on long trades right now, because you see them and you can execute them and you can practice getting better at that while you're developing the skill for short trading later on, right? So the little things like that might make it easier. If it's something else that requires 1, 2, 3, 4 different indicators on my chart to be able to all line up, and I'm not capable of multitasking like that, and I can't see all 4 of them at the same time, it's not going to be a trading plan or a trading strategy that's going to work well with my personality. The other thing, and I just mentioned that, is personality, and that is how fast I have to be in the trade, or how long I should be in the trade versus getting out. So scalping, I'm not the greatest scalper. I like to be in a trade and I like to hang on to it as long as I possibly can. And that can hurt me in certain markets, but some strategies just aren't good for the scalper. I find when I scalp, I personally start to overtrade. It gets me going, it gets the momentum going, it gets the adrenaline going in me. It doesn't work well with my personality, and it actually sets me up for trading poorly. So it's not the best thing for me to do. I find that it's better for me to take a more uh, zoomed out look, hold it a little longer. That means I'm going to have some pullbacks. I'm going to have some P&L drop as it's doing some pullbacks. I'm going to have to sit through some of that, but then I can ride it longer. I recognize that with my personality. So those are really some of the key components for even figuring out what trading plan or trading strategy would work, and then how I can start to develop a plan from there. And then when all else fails, work with somebody. If you find something that you really, really like, and you're interested in learning how to do it better, work with somebody that already knows how to do it. So find a mentor, right? That's kind of some of the, I guess, quick points that I would suggest. How about you?
Yeah, I like everything that you said there. But I think I would identify trading, or at least be able to create some similarities to trading as to building anything from IKEA. Like if you've ever gone to IKEA, uh, you buy a new table, and they'll give you the mini little tools that don't exist anywhere else in the world except for IKEA. They give you some kind of instruction manual that is just bonkers. It's none of it makes sense. Half pictures are drawn weirdly incorrectly, and you're looking at this thing like, I don't know how to do it. And usually at some point, at least for when I'm building IKEA furniture, it always comes out wrong the first time. I got to almost take it all apart, rebuild it, reassess what these directions are trying to tell me, until I end up with some kind of furniture that at least halfway resembles what what the picture on the box was supposed to be. So in some ways, I mean, like you said, everybody should have some type of broker, and you should be comfortable using the broker. You should know how to flatten positions if things aren't working as expected, or if you make a mistake on entry and you just need to get out, just to kind of reset and do it correctly. So having the tools is one step. Um, but before you could come to that finished product, you have to make it through the manual, right? Everybody could look at that same exact IKEA manual and come up with different ideas as to what part goes where. There's a way that might work for one person that doesn't work for another, right? And that even you saying I like to hold trades, because we went through your strategy and you're going off volume, things like that. True, great spots to get in. I know the targets you're looking for, but for some other people, depending on where they're at for the month, where they're at for their stage in trading, how risk averse somebody might be, the holding part, which you found comfortability in, might not be as beneficial to somebody else, at least for now, until they kind of develop and really understand what else is happening in the markets as to why you should hold, or now is the time to bail on the trade and just take the profits. So I don't think there's one solution there's not one set clearly written in English or French or Dutch or Spanish or whichever manual they give you at IKEA. I don't think there's one certain direct route to go to be a consistently profitable trader. What I would do is almost try to, and you mentioned the mentor, have a mentor, have a coach. Try to emulate what they do, right? So if they're trading successfully, if they have a history of trading successfully, their exact style might not fit yours, but almost try to become a chameleon. And there's nothing wrong. You're not losing any dignity by copying somebody else's setups, their trades, because I think at one point you'll end up being able to switch it and find out how to tailor that setup that works for you. And maybe it's that setup is great for that mentor, but it doesn't work at all for you. And that's fine too, because now you found out something that doesn't work and you're trying to find more of your trading style. And that could be with somebody that's just either their plan doesn't really fit with yours. It could be with they're trading shares and you want to be an options trader. They're trading stocks. You want to trade futures. They're trading futures. You want to trade crypto. There's different assets that you could trade to be profitable. It doesn't all have to be the same thing. It doesn't have to be the same exact stock. The setups, they don't have to be the same. You could take somebody's trading plan, but maybe the setup is that one piece that you're just struggling with. So it's either you have the option to look deeper into it to see what you're missing on the trade, or how you're what it is that you're not really seeing with that same setup, or maybe you could keep most of the plan and just scrap the actual entries and stops that for you're having trouble with, and there might be another mentor that has that other solution that for you now you have your own customized plan. So I think in a lot of sense a lot of what you just said is good, but for traders, I think there is some aspect of developing what's better for you, because there's 1,001 different elements that could affect a trade or strategy. And your job is really to discover who you are as a person. And we talked a lot about the mental aspect of trading and how important that piece of the puzzle is. Have the mental know-how of who you are, and then be able to adopt portions of other people's trades that have already been in that situation before, and be able to incorporate that into fit you well or better.
Mm-hmm. Now, I know for myself that I am a trader that likes to get in during the open. Somewhere during the open, within the first 15 minutes, I like to be in a trade. If I haven't been in a trade within the first 15 minutes and I feel like the move is done and it's too high, too low, can't get in now, I've lost my opportunity. That's how I feel. And I know that it's not necessarily true, but that's just an emotional thing that I recognize part of my personality. Now, I have seen several little strategies that even RLT that we've presented or we've shared with our clientele. And what I love about that, first of all, is it gives you some base rules that you can play with. But I don't just stop there. I take that and I go and I back trade those rules the way that they're written. I back trade it and I see how I like it, whether it fits into my goals on a monthly level, weekly level, whatever it might be. But I test to see how I can react. First of all, how can I trade it? How can I understand these rules? How can I understand the setup? How can I understand the management? All of that stuff. Back trade it. I see what the baseline is. And then I start to back trade it again, but I tweak it. I adjust it. I do something completely different. And when I say different, I'm talking about maybe the management might be different. As you were saying, just alter the entry or alter the exit. And I will alter just about everything so that I can hold as long as I possibly can and minimize my risks at the same time. So I take whatever strategy as a base, I test it out, see how I like it, and then I start to adapt it, manipulate it, and change it. And then I back trade it again and again and again and again and again and again and again. And I back trade so many different times. I've taken many strategies that I've learned over the years, and I've back traded them several times. And when I say back trade them, I've gone back as far as I possibly can in TradingView, and I back traded every single setup that I could possibly find. And I've done that right up until the current time. And I've done it in multiple time frames even to see if maybe trading it on a different time frame might work. And I do that repeatedly over and over and over again. And that builds a skill, first of all, for being able to, as we mentioned already, recognizing who we are and what we like and how we can trade it. But it gives you ideas as you're doing it of how you can potentially change or what you should test next. It gives you suggestions. Well, maybe I should start using this as a stop management, or maybe I should try using this as a stop management. Or maybe if I just alter the entry here, you get creative with your entries, and you develop that by getting the time in front of the charts. It starts to create more ideas. And that being said, also, there might be new setups that come up that you start to recognize because your pattern recognition starts to become more consistent. That makes sense, right?
Yeah.
So what do you take new strategies and do you alter them, or do you just create yours from scratch, or what have you done in the past?
Yeah. So I like, again, there's a million and one strategies out there, right?
Mm-hmm.
Some are better than others. And I also say that sentence with a grain of salt, because when I say it's better than another one, that could just mean it wasn't my preference. Right? Or
Exactly.
they are looking for something different than I normally look for, and I struggle with that particular setup. What I do for me personally, which I find extremely helpful, is not to have a closed mind toward other strategies.
Mm.
because if I do that, I'll never improve on my own trading, right? And every single day that the bell rings in the morning, whether you take a trade or not, you're trying to still better your trade. That could be by actually hitting the button to buy or sell or short a stock. That could be just by having the extra patience that day to let the entire day go by from 9:30 in the morning till 4 p.m. But you know what? You don't see the setup you're looking for, and that develops a lot of that patience that might be required in order to not just jump into trades, and also that waiting will also help enforce some of that hold muscle, I think, too. Because
Mhm.
if you're in a trade and you're in 55 trades a day, number one, you're probably not holding those trades long enough for those full patterns. You're probably getting freaked out and scared to either try to take a quick gain or try to move your stops too quick and you're getting stopped out. But if you're very patient on the way in and you're saying, you know what, I like this candle, I like this volume, I like this location, I could now apply maybe a strategy into what I see in the market, and that will give me more specific entries and stops and how I would play it by those rules, right? And I think by being patient on the way in, that allows you to also be patient during the trade because you know you might not be the trader that takes 55 trades every single day. You might be the trader that I'm waiting for that one opportunity. If I don't see it, I'm not trading, or I'm
Mhm.
waiting for that one or two opportunities. And then if it comes in, that's your shot, right? You're taking your shot. You're trying to run the trade how you've seen it over and over again, and you're very intentional how you interpret and take trades in the market. I think by doing that, that will allow somebody, the person that takes 55 trades, like I said, they might get freaked out by one little candle, or maybe they're trading in their stops off a 1 minute chart, and sentiment changes so quickly on a small time frame that you don't let what you actually like develop and play out. And I think that
Mhm.
could be a huge mistake that a lot of people run into when trading the market, because in their mindset, okay, you know what, I'm up $100. I'm just going to bail on this trade and I'll wait for another setup to come in just like it. How good out of 55 setups? How many of those are your perfect setup that you'd like to take? If you were to, and I think Jeremy's said this as well, if you were to treat every single trade like you're throwing out $1 million on that trade, your sentiment as to how many trades, when you get in, all your stops, they're all going to be very different and calculated. Where people that might have a smaller or $50 or $100 or $200 or that money is not as meaningful for them in a grand scheme compared to $1 million. They might want to take more trades. They want to be in the action. But if you're risking $1 million on a trade, you better believe you're waiting for that good trade because you don't want to lose it. But if you treat every trade like it's that big of a deal, that trade, and you calm yourself down in the markets, you're able to just be patient, hold the appropriate amount of time that fits your plan, that fits your style of trading, then you just have a lot more confidence every time you do hit the buy or sell button.
Yeah, I like that analogy. I think it can be a double-edged sword though, because it might help you with the entry, like waiting for your entry. But if you have that same attitude when you're in the trade, you could also be exiting way too quickly, right? For that same fear. I know I would be if I was thinking that I had $1 million in line on this trade. If I treated it like that, I would be concerned with as soon as it started to show that it was going against me, I'd be exiting instead of giving it the opportunity to kind of ride itself out and get rid of some of the I guess the volatility that might exist, especially when you play the open. But I definitely like that analogy for picking your trades. It's really about, and I think that maybe having moments where you have lots and lots of trades and going through that stage, especially if it's a small R and it's not really going to break the bank for you, getting that out of your system and really recognizing that less is more by getting it out of your system and seeing kind of the devastation that it can create in your P&L, or just recognizing that, you know what, maybe I should have just called it done after a couple trades here because it wasn't working in my favor, or vice versa. And it's hard to say, but that might just get it out of your system enough that you could start to be open to holding things longer and being more patient. So I think
Yeah,
there's a couple different scenarios that could be approached or used to get you there, right?
I think you have the. I think. I mean, I don't know if I'm. I'm sure somebody's out there with more discipline than I am or most people have. But I think that's one of the things that people fall into in the very beginning is they're number one, they're getting so excited. How many, if
Hmm.
we talked about last week or the week before, we talked about, is it gambling?
Hmm.
If you're sitting at a blackjack table, you don't expect to only see one hand, right? If you're sitting there for 5 hours and you're like, okay, I'm going to play my hand when it comes in, and I get aces that I could split and double down and do all this crazy stuff. You're going through a lot of hands first before you get
Hmm.
there. You're expecting to still put money in every time, and I think that's when you do cross that line a little bit of gambling. I think that's a trap that a lot of people fall into, and I think it's based on number one, you're just excited, it's something new. Uh, you're like, oh man, and you just come into the market and thinking new mansions and new yachts and all my bills are paid, and you just have this picture coming into the market, which can all get to those stages, but
Hmm.
people just need it now, right? And I think that encourages the over trading, and I think also lack of knowledge of the market also forces more trades, which you
Hmm.
would think would be the opposite. Like if you've never if you're a doctor just graduating med school with you're a heart surgeon, I guarantee your first patient, you don't start at the hospital day one and like, I need 1,000 patients today. I can't. I got all my student loans I got to pay back. I got to pay back all the insurance I had to pay for, all this stuff. So if I get 1,000 students on the first day, I'll make all the money back and I'm good. I bet you that heart surgeon is going in with a very different perspective of how he's operating that day, knowing that this is his first time working on somebody's heart and he just wants to get it right. But the markets have a very different, for whatever reason, markets have a different appeal to them, where somebody without the right proper training or experience jumps in and they're either going too heavy on trades, they're trying to take as many trades as they possibly could. And I think that's a nuance that a lot of new traders get. But I think over time, once the nerves and excitement, the markets are always exciting. There's always something happening. But I think once the overall understanding that you're here to make money, but you're not here to get rich today,
Hmm.
right? We have the entire time to really learn the process, hone the process. And once you learn it correctly, it's that gift that keeps on giving. Because then every single day you can wake up and find those opportunities that you're looking for, as opposed to I'm watching one stock and every single green or red candle I'm going either long or short on it. And
So
I
I'm
think
curious.
that's something that people have to kind of understand.
Yeah, for sure. I'm curious whether you think that social media plays a role in how people approach the markets that way. I think that, is it possible that the social media, where you have all that clickbait and you have the fancy Lamborghinis and the get rich and all this other stuff, that's giving this false expectation or this false impression of what the markets are like, and that's why individuals that are learning to trade now are coming in with such a poor expectation of what should be done. Their expectations are not in line with reality.
I, I I think any of the ads with the Lamborghinis and the personal jets and beaches with mimosas, I I, I don't know if that's the trigger that is bringing people into the markets with this idea of okay, great, I'm going to get rich. I think the issue is fundamentally a lot deeper in a lot of people.
Yeah.
Um, I think we grow up in a consumer world, and I
Mhm.
think being able to look at somebody else that has the newest electronics, the newest porch on his house, the newest uh, brand new sneakers that come out, I think all of that over time gets ingrained into people's heads of, well, how is that person getting all that stuff? And then you go home and you're like, well, but I have $100,000 of debt, right? How do I pay this off and have that? So I think we end up having an inherent need for wants,
Mhm.
where I think we just want everything. And I think there's, in some sense of us, we, and I don't know if it's for everybody, but I think there's a sense of, well, why can't I have it now?
Yeah.
Right? If I'm looking at Bill down the street, he's the same exact age as me. We went to the same school, and I'm looking at him. I'm like, whether he can afford it or not is a whole different thing. But the fact that he has it, and you're looking at your lifestyle, and you're like, no, I'm not on the same page. I think when it comes to a lot of the social media stuff, I would say probably most of it is fake out there. Anytime you see a picture on Facebook and it's always the family happy and on a beach somewhere. Yeah, that's for the picture to get that pose to send on the gram. But I mean, nobody saw the car ride to get to the beach, right? So nobody understands the full situation. But you just see that over and over again, and you want that change. You want to do something different. And as soon as you see that ad, or you go, oh, there's a stock market. I could trade this market if all I have to do is make $500 a day, $1,000 a day, $20 a day, whatever your lifestyle is, for me to get to my situation. That person is now trying to overly aggressive play the market in a sense he probably shouldn't, because he's not really trained to do so yet. Right?
Mm-hmm.
He hasn't really learned he hasn't crawled before he walked.
Yeah, it's almost like people approach the stock market the same way they approach buying a lottery ticket or whatever.
Yes.
It's just it's this get rich quick thing, and it's really unfortunate because I think that keeps the individuals delayed in their growth right off the bat, because you got to get through that stage before you can even start to break yourself down enough to be patient enough to learn. And that keeps you from, well, as far as I'm concerned, it delays you probably about a year, 6 months to a year in your education, 6 months to a year in your trading. And that's if it doesn't drain your account in the process or get you to quit altogether, right? So
that's what I was saying. I was going to say either it's going to slow you down or prohibit growth altogether, because
exactly
a lot of those people that come in, whether they're in an okay situation looking for better or in a bad place looking for a way out, by not doing the due diligence, not really learning the craft, and really what the candles mean, the charts mean, how the economy is kind of working around where we are, what type of market. If you don't have that fundamental basis, just slow down, because if for the person that is the growth is delayed, that person's still blessed, because at some point he's still going to get to that point of growth, and it's just a longer time than it has to be to get there.
Mm-hmm.
But the person that gets absolutely stopped in his shoes, he's now in a worse situation, because he's not satisfied at all. That person did not get the new yacht, the new plane, the new boat that was promised on the Facebook ad. And not only that, but he's lost money in the process of trying to get there. And now he's completely discouraged, probably doesn't look at the stock market again until the next Dogecoin comes out. And he will just stay away from everything. And in the process, it's not the people chasing the massive, incredibly stupid moves of a Dogecoin is not the same people that are trading the stock market that could be consistently profitable.
Yeah.
If you made $10,000 on the Dogecoin, and I'm just throwing out a number, but if you made $10,000 or $100,000, okay, you made that maybe in one day, but then you go back the next day, you're probably in a slower path of just losing all that money, because that second coming hasn't happened yet.
Mm-hmm.
Where if you're able to go, okay, if I just make $1,000 a day, all I need is 10 days, and I'm still at the 10,000. Or if I make 1,000 a day, okay, 100 days later, I'll still have the 100,000. But you've been trading to get it, which means that's a continued process that you could do, as opposed to hitting the winning lotteries, like the winning numbers, like you mentioned before.
For sure. Well, again, this is such an interesting conversation, and I thank you for that. So I appreciate it. Do you have any final words for the audience, or?
Yeah, final words. Slow down. Learn.
Mm-hmm.
Have a coaching session with somebody in the market. Have go through a mentor group. Find somebody that, at least for now, you like what they say, right? That has a track record in the market, because that trading style might not be a perfect fit for you, but at least what they're saying is an interest for you. Mm-hmm. And there's something there that you could learn. I think you could learn something from every single person, whether that style fits you or not. And if you're brand new to the market, don't worry so much on strategies. Worry about what is the layout of the market? How do I read the candles? How do I interpret what is happening? My biggest thing that I tell the coaching students is every single strategy is absolutely garbage unless you know how to read the market. Because if you have a great strategy that has a 80% win ratio, but you're applying it in the wrong spots every single time, I can guarantee you that ratio is going to be way different. Understand the market, understand the location. Same thing with real estate. You just don't go out and buy a house on a swamp, because it's probably not going to be a good investment later down the road. So have the location, understand where the prices that you think those stocks should be at, why they're moving a certain way. Once you have that, then start developing the next step. The strategy will give you a specific plan for entry, stops, how you manage a trade. But if you're doing all of that in the wrong place, it's very difficult to navigate the markets and be successful trading.
Absolutely.
But unfortunately, we are just about out of time. Tracy, always good to have you co-hosting the Pivot Podcast. Also, guys, make sure we did talk about some coaching, some mentor groups. Check the links below. We do have real life trading mentor groups, coaching sessions as well. Or just shoot us an email if you guys have questions on trades. We're always here to help. Thanks again for listening each and every week to the Pivot Podcast, and we will catch you guys on a brand new episode next week.